Someone commented on my last video and said, what would happen if there was a 50% correction overnight? The truth is I didn't have an answer to it, so I thought I would sketch out all the different scenarios, what that looks like if there is a 50% correction, and where that leaves my £420,000 stocks and shares portfolio. So shout out to James Gould for giving me food for thought. He commented on my last video about retiring at 45 and said, that all of the money in my stocks and shares ISA doesn't exist. It's just a line on a piece of paper or a line on the screen. And he was preferencing hard assets just because he felt like there was a correction imminent. And I don't think James or I can predict the future. So I'm not saying that James is right and there is a crash coming. There's always a crash coming at some point. I think that's something we will all agree on. It's just when that is, and none of us know when that is. So James might prove to be right. He might not. The stock market might go on to rally for years to come, and James investing in other assets might prove to be a negative, or he might be seen as a genius because he might move it out just as the right time, and then the stock market implodes and he's got his money elsewhere. Time will tell. For me, I'm not trying to play the market. I very much believe that old adage of time in the market, not trying to time the market. So a bit background, what I'm going to talk you through is all of the scenarios of what that looks like if we have a 50% crash for me personally on my portfolio. To give you a bit of background, I'm currently contributing about £17,000 per year. I have 4 years until I hit 45, which is when I'm planning to retire. And I think the critical detail, what I've always done in the 11 years I've been investing, is continue to invest through every downturn. I don't panic. I just continue paying myself first with my direct debit and my stocks and shares ISA every month. That happened in 2020. I've continued to do it in the recent turbulent times, and that is something I will continue to do regardless. So I'm going to stay invested. I'm not going to panic, but what does happen if there's a 50% crash? And I've got 4 scenarios. The last 2 are probably the most scary. Scenario 1 is the ideal situation. Things continue on pretty much as they are, actually with quite modest returns. So I factored in an 8% return for the next 4 years, contributing my £17,000. That takes me in some nice increments. Year 1, I would end with £470,000. Year 2, £525,000, crossing the £500,000. Year 3 would take me up to £584,000. And then in year 4, when it comes to retire, I would be at £649,000 with my 6% withdrawal rate. I know most people talk about the 4. I've made a video and I'll make another one about why I'm much more aggressive with a 6% withdrawal rate. That leaves me at £39,000 per year. And that's the dream scenario, right? The plan works comfortably. I hit 45 with nearly £650,000 in my ISA. And then I've got my pension, I've got my private pension, and I've got my state pension to come as bridges when I need them at 57 and 67 or whatever age the government dictate I'll be able to take those. So that's the dream scenario. And unfortunately, as we all know, we don't live in the dream world. So I've got some other models which aren't quite as easy on the eye. So scenario 2 is an imminent crash. So that's a crash tomorrow. The stock market opens up tomorrow morning and it drops 50% almost overnight. That's a scary thought, but it could happen. So my portfolio from £420,000 would drop to £210,000, half gone, just like that, in the blink of an eye. And that's all of the growth that I've had pretty much wiped out in an instant. But here's what I'll do. I'll continue on. I'll keep putting in my monthly direct debit. I won't sell anything. And I'll keep buying those shares when they're at a cheaper price. And I factored in the market rebounding 8% per year. So with that number, year 1, I would end at £243,000. So in 12 months from today, that would get back to 243, so nearly crossing the £250,000. Year 2, I'd be on 280,000. Year 3, I'd be on 319,000. And year 4, right before I wanted to retire, I'll be on 362,000. Now, obviously, that's not 649,000. It's a drop of £287,000, right? And that stings. That hurts a lot. But it's still not zero. And what a lot of people forget is in that 4-year period, I've been buying shares at almost half price. Every single £17,000 contribution has bought nearly twice as many units as what it would have done at the peak. And that crash could be seen as a disaster, but it could also be the best thing that ever happens because I bought all of those shares at a discount. I haven't sold, I haven't panicked. I keep buying those shares. And if the market does have a big rally, then that's the key thing that could make me a millionaire very quickly. So not all doom and gloom, but certainly not great. Scenario 3 doesn't get any easier. So this is crash in year 2. So it's not tomorrow. We continue on. We have another good 12 months in front of us at 8%. Year 1, like I said, ends at £470,000, and then there's a crash. 50% crash take me to £235,000. And then there's an 8% recovery for the remaining 3 years, combined with, again, my £17,000 contribution. And that takes me end of year 2 to 271,000, end of year 3, 309,000, and then year 4, 352,000. So 10 grand less than the previous scenario, and a massive £297,000 worse than scenario 1, which is pretty scary. Nearly 300 grand worse off because of that crash. But again, I've had 3 years this time of buying shares at a discounted rate. So definitely scary. 300 grand's a lot of money to lose, but playing the long game as investing is, buying those shares at a discount will hopefully, pardon the pun, pay dividends later down the line. And then scenario 4, which is probably the scariest one of all, and this is what James is really worried about, and I think you mentioned in the comments, and I am too, to be fair. What if the crash hits right before I retire or right after? I've had 4 years of good growth at 8%. The portfolio has got, if it's at the end, 650,000, and it halves overnight to 325,000. A huge drop, but still a significant amount of money. It's not going to make me abandon the plan. It wouldn't make me sell, but what it would make me do is reconsider the timeline. Obviously, I can't stop working. I couldn't retire in that instance, and that's down to the sequence of returns risk. If that does happen, the good thing is, because I'm young and hopefully I'm still fit and healthy at that age 45, I've got a lot of cards to play. I can continue working, continue contributing for more years, buy those stocks when they're on sale, and then hopefully the market will rebound, and then I'll be in a really strong position just a little bit later down the line. And I think that's why I'm so confident and so aggressive in my plan, because I have a lot of cards to play if things go wrong. The main one just being continue working. And I'm working anyway. Most people work until they're 65, 70. If I have to work 2, 3, 4, 5 years longer, up to the grand old age of 50, that's not the end of the world. It's something I can certainly factor in. And if we do have a significant crash, I won't retire when the stocks and shares are dropping every year, because of that sequence of return risk. I'll continue working, or I'll certainly have some work, so I'm not, doubly depleting my fund, both in terms of negative returns, but also me drawing down on that money as well. And like I said, it just gives me the option, but I also don't want to waste time. The biggest risk for me here is wasting time when I could be doing better things. I really want to focus on projects I enjoy, charity work, spending time with my kids, my wife, traveling, all of those things I really want to do while I'm young, fit and healthy, and while I'm still my kids' favorite person, or one of their favorite people. They'll soon be teenagers and older and probably won't want to have as much to do with me. So I'm trying to make the most of the time that I've got with them now, and really enjoy this period. And I just wanted to document this really because I'm sharing the entire journey here. I'm not naive. I know I haven't planned in everything. I know there's things that can happen outside of my control. I know my plan is aggressive, but I'm also relatively comfortable with that because, like I said, I've got a lot of options, and I'll document this all the way through, the warts and all. You'll see the positive returns, you'll see the negative returns, you'll see the emotional roller coaster that investing sometimes can be. As you know, I and ah about different things, paying the mortgage off, taking some money out for big holidays, whatever it might be. I'll share this along the way. So any questions, comment below. If you want to follow the journey and see if this actually pans out and see if I do manage to retire in 4 years, and subscribe. And I'll see you on the next one.